Financial Mappers, in its current state, is designed as an Australian-specific model. However, the background rules for any country are included, and anybody purchasing the product at the moment can change the rules to suit that country. In due course, country-specific models will be made for other countries when people with sufficient expertise advise what these are. To change the tax schedule, click on this link. You can activate or deactivate a flat rate of tax with a tax-free limit. You can also select one of the sample countries already provided, or you can edit it and create your own tax schedule. If required, you can include personal deductions. In addition, you can specify capital gains tax. The Australian method is that a percentage of capital gains is taxed as income. You can also have no capital gains tax, or you can select a flat rate. A progressive capital gains tax option will be included in due course when that's required. In addition to these rules, with the specific asset accounts, you can change the tax applicable for each specific account. In the case of shares and managed funds, you can specify them as either taxed as income, a specific tax rate, or you can specify it as tax-free. If you use the first option, taxed as income, you can also specify tax credits. We have 4 methods here. The first defaults to the Australian method using the current rules. However, if somebody has a system similar to the Australian method, they can select Australian method and then add the corporate rate, and that rate will be applied. For Canadians, their method of tax credits is included. If there's another country with a similar method, the Canadian method can be selected, and then the parameters for that method can be specified. When we come to retirement funds, the software defaults to Australian superannuation, and over time we'll add other countries' pension rules, such as the 401k. In the meantime, the user can select the universal option and create their own set of pension rules. The Rules tabs here should be applicable to all types of pensions internationally. The first section is contributions, where you put the age limit on contributions and contribution limits. Employer contributions may be matched. In this case, 50% are matched to a limit of $5,000. Or employer contributions can be a percentage of salary, as it is in Australia. And if the contributions change over time, you're able to specify that change schedule by checking the indicator here. The second section is tax credits. You can enter the tax rates during the savings or accumulation period and the drawdown period. You can also specify the tax rate for pre-tax contributions into the fund. Various drawdown tax methods for pre-tax contributions can also be specified. They can be taxed as income, given a specified tax rate, or made tax-free. The third section is drawdown rules. Here, you specify the age when drawdown starts. You can select to show a relevant table of preservation ages, where, as in Australia, this varies with the year of birth. The fourth section is drawdown limits. The default is predefined limits, and there are international options that can be selected here. You can see the current international options available, and of course more can be added as required. Alternatively, the user can instead specify other limits. Gender can be specified. A factor or percentage method can also be specified. This now concludes how we can customise retirement accounts. The modelling tools which allow us to stress test our plan with what-if scenarios, include applying historical data. In this area, we currently have Australian historical data, and of course, any other country's historical data can be added as an option. So the structure of the software is in place, and additional international options can be added easily in each section as required.